Hello everyone, welcome to my YouTube channel, and today I want to discuss the today's market action, my learnings from it, and my view going forward. So without further ado, let's jump on to the analysis. The way I structure these videos is, first I discuss all the time frames starting from weekly, daily, and then intraday. And then I discuss any fundamental news or any macro section which is responsible or which might have a huge impact on the markets. And then I provide the summary of what to expect and my strategy going forward. So without further ado, let's jump on to the analysis. Let's start from the weekly time frame. So in this weekly time frame, I wanted to highlight three important things, and let me show all of these in the chart. So this is the weekly time frame, and you can see over here each of these candles is 1 week. One observation is we will have this 7th consecutive green week if we close this week in green, which is highly rare, but let's see what happens. The second thing I wanted to discuss is we are still getting rejected from the top of the Bollinger Band over here. The third thing is you can see the blue line over here, that is the 5-day moving average. Now, let's say if the market, decides to pull down or have a drawdown, then the first initial level of support is going to be this 5-day moving average. That is a symbol of the shortest term sentiment. So in the weekly charts, I wanted to highlight all of these levels so that you can be, you can make informed decisions. So apart from that, I just wanted to highlight that the contracts have been switched. The volumes have transferred to the March futures contract, that is NQH 2024. So please make a note of it while trading so that you get better liquidity and you trade very less spreads, and you start with a new contract. So that's my take on the weekly time frame for the Nasdaq futures markets. Let's go now to the daily time frame, where there are multiple analytical points and much more clarity. In the daily time frame, I wanted to discuss two important points. One is we are very fast approaching the initial R1, that is the pivot level resistance on the daily time frame. And the second is if we choose to go down on the intraday basis or on the daily basis, then the first level of support, that is the initial line of defense, is sitting at 5-day moving average and the Z Lima. Now, what do I mean by Z Lima? It is basically zero lag exponential moving average, and I use it to gauge the short-term sentiment. So let me show you all of this in the charts. So if we go to the daily charts, that is this one, as you can see, we just switched the contracts on the Friday, and as you can see that this is like monthly pivot levels, and we are very fast approaching the R1 level. So already we are overstretched on the upside. So the top of the Bollinger Band has already been breached. So my next level of resistance, or the strong level of resistance, is going to be 16,660. That is R1 over here, as you can see. And let's say if the market decides to pull down, then my initial level of support is going to be this 5-day moving average and this purple line, that is the zero lag EMA, and the period for which I'm using this is 26. So this is my take on the daily chart. And as far as the final level of support or a huge level of support is concerned, that would be actually this white line that is highlighted over here, which is the anchored VWAP, and which is sitting around 15,980. So keep a close eye on these levels, because this is going to be a jam-packed week. Tomorrow we have the CPI data release, that is consumer price inflation release, and the day after tomorrow there is a speech or a press conference from the Federal Reserve Chairman Jerome Powell. So both of these events are going to be very highly volatile and market moving. So on the daily basis, as you can see over here, we are just consolidating since last 2 to 3 weeks. And the next leg of the markets, mark my word, the next leg of the markets are going to get decided by the remarks of Federal Reserve Chairman Jerome Powell. So I'll discuss that and its implications in the macroeconomic section video. But as far as daily time frame is concerned, the price action and the technicals are looking bullish. So that's my take on daily time frame. And now let's jump to the intraday time frame. So talking about the intraday time frame, there are two important points that I wanted to discuss. One is we were getting rejected from the R1 and R2 resistance levels from the pivot point indicators. And second, we almost never got a bullish or bearish crossover into the regular market session. So let me show you all of this in the intraday charts. So this is the intraday chart. And let me show you, like, each of these candles are 5-minute candles. So I use 5-minute as my reference for intraday charts. And I also use hourly levels just for getting a higher time frame perspective. So let me show you what happened today. So normally what I do is I never trade on the first 30 to 45 minutes of the session of the regular open. And the reason is it is very, very volatile, and the direction there is a very high chance that your stop loss or your, volatility targets get hit, without reason. So I don't see a very big value in trading in the first 30 to 45 minutes of the session. I normally, let the news, data releases happen, let the market digest all this news, and then I take my positions. So with that in mind, let me show you my game plan for tomorrow and what happened today. So as you can see, right out of the session, right after the open, we were really, really bullish. The market kept going upwards. But as you can see over here, the moment it approached the R1 level, it got a minor pullback. Again, it approached, it breached, but it did not sustain above the R1 level, and it got a good pullback. And then finally, it tested the R1 third time, and then went on to go higher. So one of the key observation over here is, as you can see, we never got a bullish or bearish crossover. Now, the bullish or bearish crossover that I look for is the 5-day EMA crossing over the 26-day EMA. That's a bullish or bearish crossover for me. So as you can see, we did not get a EMA, setup today. But the second thing is, we knew that, if we have a bullish momentum, and if we have, the pivot levels getting respected, then there is a good, risk to reward trade to get into the counter trend. So what do I mean over here? When the price approached the R1 level, that is the pivot level that you can see over here, this red line, and when it closed above R1, I was waiting to get a good shorting opportunity. So as you can see over here, 16,400 was a psychological point wherein I could take a position for 5 to 15 points. So that's exactly what I did. I took the position over here and cut my position when the trade had gone in my favor for 5 to 15 points. So that's one of the trades that I took. And then when it again breached the R1 level, then I again went long for just 5 to 15 points. So that is the only thing that I did today. Only 2 trades. And if you talk about the Qs, the reason why I track the Qs and keep a good eye on it is because the Nasdaq futures market and the QQQ ETF are very, very highly correlated to each other. So if you have a resistance on the Qs, then it will affect the Nasdaq futures markets. So Qs were pretty much in sync with the markets, almost to the entirety of the session. So that we got a lot of confirmation from Qs as well. When the price went above the R1 on the Qs, then that was also a good indication to go long. And it went to till the R2 and then just consolidated near the R2. Now also going to the VIX, VIX had taken a support at S1 level on daily basis very beautifully. So as you can see over here, normally I tend to look on VXN, that is the volatility specifically for Nasdaq markets. So the ticker symbol is VXN, and this VXN, as you can see over here, it took the support at S1. And if you look at intraday, then the intraday story is really, really different. Why? Because it kept on going lower. So as you can see, the VIX is an instrument which measures the volatility. And if you can see the volatility is making lower lows, and if it is going down, then the markets should ideally go higher. So that's exactly what happened. And as you can see over here, the VIX kept on going lower. So that's the observation from VIX. Also, now let's go to the economic calendar for the macroeconomic section. So in the macroeconomic section, I wanted to discuss, this week announcement. So this week, there is a major announcement today or tomorrow, that is the CPI data release. Now people are expecting the inflation to slow down, and in my humble opinion, there are very high chances of inflation not surprising us on the higher side. Why? Because last month the crude oil prices were also very lower, so that should reflect into the CPI data release as well. So I don't expect a very high, surprising print on CPI tomorrow. That's my humble opinion, because the crude oil was very, very lower last month. So let's say tomorrow the CPI comes in cooler than expected. Let's say if it has 2 handle on the headline number, even if it is 2.999, the markets are going to take that as a positive event and it's going to rally. But let's say the CPI stays stubborn, let's say the inflation is sticky, and if it comes in higher, then there are very, very high chances that we will tumble and we will go down. So that's the logic behind the CPI. So you'll ask, okay, where can I see everything and how can I, be informed? So I've got a really nice, everything ready here for you. So this is the US Bureau of Labor Statistics, in which this website you can go and you can check all the data releases. So tomorrow it's going to be, over here, 8:30 EST. So I'm in Pacific time zone. So my 5:30 is going to be, this CPI data release. So you can see all of this. And more importantly, tomorrow is the start of the Federal Open Market Committee meeting. So FOMC meeting is going to happen tomorrow and day after tomorrow, and you can check this on the Federal Reserve website over here. So as you can see over here, December 12 and December 13 are going to be Federal Reserve's meeting. Now, the most important thing that we need to watch is Wednesday, that is day after tomorrow, Federal Reserve will have the CPI data on its hand, and then on Wednesday, they are going to do two main important things. The first one is they are going to decide if they are going to keep the rates same, or if they are going to, raise the rates, or if they are going to cut the rates. So how can we know as a trader and as an informed market participant? So there is a very nice CME Fed Watch tool. So this is the official website of Chicago Mercantile Exchange, that is CME, and it is a Fed Watch tool over here. And as you can see over here, the probability of, rate hike is almost negligible. So 98.4% chances is the Fed keeps the rate same. Now, if the Fed keeps the rate same, that means this will be taken as a dovish, indication from the Fed. Now, markets will be happy. Now, the third thing that is very important and which a lot of people don't talk about is, let us say that the inflation data comes in cooler, or it comes in very low. Let's say the Fed keeps the rate the same, but the Wednesday's day is going to be the speech or the remarks from the Fed chair Jerome Powell. Now, if he, says any comments of hawkish, and if he says that, rate cuts are not even on the table, in his terms, they are not discussing rate cuts and so on and so forth, then the markets are going to take those comments from Federal Chairman as negative. So these 2 days are going to be extremely volatile, and I told you and I showed you the underlying dynamics, the fundamentals behind all these things. So please, refrain yourself from taking big positions. Always wait for the incoming data, let the Federal Chairman speech get over, and then, take your own positions. As far as, trading and as far as financial markets are concerned, the next leg of the markets are going to get decided on Wednesday evening, wherein all the data is released, all the speech of the Fed chairman is done, and then we'll have a really nice clarity, and then we will be able to tell that, okay, are we still in the Christmas rally? If this rally is still going to, sustain. So all those questions will be answered almost at the evening of Wednesday. So this is the data that I wanted to show you. Make a note of these website, as it will help you in future as well. So this is my take on the macroeconomy, and this is my view going forward. So lastly, I wanted to thank you for your time and for your patience. And I know this was a long video, and I hope that you have got a really nice knowledge and insights and a lot of things that will make you an informed market participant. The whole goal of my channel is to share genuine, unbiased knowledge about the markets. So feel free to like, share, and subscribe, and stay tuned for the next videos, and let's get in touch.